Hello, my name is Steve Bigelow with the Candlestick Forum. Had a very, I want to say critique of, not a very, but a critique of somebody questioning that how come when the market was already up here, you were saying there was now a reversal after it'd been up 800 points. The answer is very simple. The T line is a very powerful indicator. It wasn't a sell market at this point because it didn't close below the T line. It wasn't a sell point at this point because they never closed below the T line. It's not a buy point at this point until they close above the T line. Now, that doesn't make your analysis on an individual chart restricted to what the Dow is doing. If your individual stock charts are showing buy signals and starting to head back up toward the T line, you can always cover your positions if they're showing buy signals. The important factor is if they're still trading below the T line, the assumption has to be you're still in a downtrend. When they close above the T line, in this case, they gapped up through it on Friday, I told you the probabilities have changed dramatically. So if you're looking for a system that tells you to buy exactly at the bottom and sell exactly at the top, you're not going to find that system. Candlestick analysis allows you to see when it's time to buy up here, confirming, and selling here when it's confirming. So you're not trying to buy at the absolute bottom. You're not trying to sell at the absolute top. You're trying to get that high probability price move in between. All these charts tell you is when there's a change of investor sentiment, the probabilities are pretty strong that it hasn't changed until they've closed above the T line. So with that in mind, what we're looking for is the highest probability trade setups. If we think the markets are starting to reverse and they're confirming above the T line, we're looking for those trades where you've got information that already tells us from the Japanese rice traders' observations over hundreds of years that there is a change coming, and then your best friend signal clearly indicates that change has started and you can be buying these uptrends. Not that we're just in an uptrend, but the best friend signal is one of your strongest reversal signals telling you you've got a very strong uptrend in progress. Or you can identify which sectors are acting well based upon the trends. And when they pull back and then start back up above the T line, obviously the uptrend is in progress because of that confirmation right there that they are still back up above the T line. This is what we're looking for, the high probability reversal signals. The McMuffin is merely a morning star signal followed by a doji sandwich. If you just dissect the logic that if this is a morning star signal, one of your 12 major signals, confirmation tells you you're going to be in an uptrend. If you've got a doji sandwich, it usually implies there's going to be more upside. So now you got a morning star signal and a doji sandwich. The results are pretty strong that you're in an uptrend. Or you see a morning star signal right at a level that you know everybody else is watching. Our recommendation on Carvana was based upon look at the probabilities. You're in the oversold area. You're seeing a candlestick buy signal right at a level everybody else is watching. They gap it up through the T line, confirming the signal, tells you the probabilities are you want to be buying on strength. Or if you want to improve your probabilities even more, you analyze individual commodities like silver, left-right combo followed by a doji sandwich, more upside. That means you can start watching the stocks related to silver, like PAS. Again, this is just merely putting common sense probabilities in your favor based upon knowing where the buy signals are occurring and what your uptrend is doing. And the more pieces of evidence you can put into your analysis. Silver price is heading up and they're buying the silver stocks. Not a hard analysis. So the biggies, you can see the reversal signal on Apple, followed by a gap up through the T line, the 50, the 34, and the 200. What's the assumption when you're coming out of the oversold area? Obviously, heading higher. So again, this is not rocket science. This is identifying patterns that tell you when the probabilities are greatly in your favor based upon what investor sentiment has done time after time. So right now, with the indexes trading above the T line, the assumption is we could go up here to the 200 again, right at this level. Will it go straight up there? That's where you apply all your other pieces of evidence that as long as it stays above the T line, you might have J-hook patterns, pullbacks, but as long as you're above the T line, you assume the uptrend is in progress. So this information is so simple as far as analyzing it visually, because you're not analyzing formulas, you're not analyzing what all the gurus are on TV are saying. It's just simple logic that these reversal signals tell you when you're in an uptrend, a downtrend, and the confirmation based upon a very strong indicator, the T line. So with that, join us. We're providing a 2-week free trial right here as the market's starting to pick up activity again when everybody's come back to their tests or their desk. That 2-week free trial will give you an opportunity to see all the information that is conveyed in our chat rooms, where we've got dozens and dozens of traders that know the patterns and signals. So this is a very fast way to learn candlestick analysis, which is a process or a charting technique that in itself produces high probability returns. Or if you're using somebody else's technique, you just add candlestick charts on top of it and it will make it even more enhanced. We're getting ready for what we call the ultimate candlestick training, September 24th. That's where we're putting all the pieces of evidence in so that the most important factor is you know when to buy, when to sell, what would be confirming indicators. And the most important aspect is it allows you to start analyzing what high probability price moves are doing or about to occur, and you keep your emotions out of your trading. That'll be it. We'll see you in the chat rooms.